Welcome everyone to our transfer pricing workshop on country-by-country reporting. For many of you here, probably getting to crux time. I don't know how many of you are 31st December year-end groups. Yeah, quite a few we've got. So for those of you 31st December, we've got like 2 months before we sort of our first reporting in terms of country-by-country local file, master file to the ATO, and certainly keeping us pretty busy with the 31st December year end. We've got people attending here and also by WebEx as well. So for those of us who are on WebEx, you can also send in questions and we'll answer those. We want it to be quite an interactive, practical session rather than just a lecture. So we've got the case study, and also, if you've got any questions as we go along, feel free to interrupt. You don't have to wait to the end. Those of you who don't know me, my name is Nick Gryson. I'm a transfer pricing principal and I lead up the Perth team. We're joined by Natalia, who leads the Sydney transfer pricing team. And Natalia's been working and delivering these sessions around the country. We've had it in Brisbane, Sydney and Melbourne. So we've sort of got that experience which Natalia can share with us as well. I also got Cassie as well, who's joining us, who's a senior manager in our transfer pricing team as well. So just as an outline of the session, what we're going to be covering today, just a bit of covering a bit of background about the CBC reporting and the BEPS initiative, a bit about country-by-country reporting templates and how the ATO might use them. And then we'll be talking a bit about the Australian specific local file. And I suppose in Australia we like to do things which are quite different from the rest of the world. And I think we're the only country which I understand has our own version of the local file, which is non-OECD compliant. And it's pretty clever in terms of it gives you, I suppose, the downside is there's extra compliance burden potentially for you guys, but in terms of the ATO, who tend to be quite analytical, it's going to give them a wealth of information in terms of deciding which clients go and select for audit. Finally, we'll talk about electronic lodgement, and we've been working quite closely with Thomson Reuters, who we believe has got the best sort of software solution for this, and we'll be getting them to demo that. So if I hand on to Cassie.
Thanks, Nick. Just to set the scene, we're going to go into a little bit of background on country-by-country reporting briefly. The impetus for country-by-country reporting was the OECD Base Erosion and Profit Shifting Initiative, which resulted in the Action 13 report on transfer pricing documentation and country-by-country reporting. Now, we wanted to emphasise that this is about transparency. They're focusing on small companies. The large companies, the Rio Tintos, the BHPs, they already had compliance requirements in many countries. So it's a fishing exercise, essentially. It's trying to tease out the information that small companies aren't otherwise disclosing and are potentially hiding, I guess. In Australia, significant global entities are required to prepare a country-by-country report, a master file, and a local file. And what's a significant global entity? Well, it doesn't matter how the size of your Australian operation, it's where the global group has a consolidated turnover of more than $1 billion Australian dollars. Are there any questions at this point? On definition of a significant global entity, for example? Is there anything you wanted to add, Natalia?
I think at this stage, a lot of people normally start asking about general purpose financial statements. And the companies in Australia also have to watch general purpose financial statements with the ATO. And I'm not sure how many of you prepare general purpose financial statements at the moment. Is there something you prepare and lodge at the moment? So it's essentially the ATO just revised their guidance, and it seems that majority of the companies would have to prepare general purpose financial statements, and a lot of them would have to follow the Australian accounting standards. So one of the, I think, interesting points here is that when you lodge the general purpose financial statements with the ATO, they would be made available to ASIC. So essentially, they would be made public. So for companies who have potentially an exemption, or rather ATO allows to lodge global financial statements, especially if they're private groups, probably need to pause and think whether they want to lodge this information not only with the ATO, but because it would be made available public, whether they would like that to be made available public. So it's good to start planning early, essentially.
So you'll probably be aware that country-by-country reporting requires a three-tiered structure of reporting, and there are requirements for 3 different reports to be lodged with the tax office. The first is a master file. Now, often that will be prepared globally, but must be lodged locally. There's no provision for lodging that with foreign jurisdiction, for example, and information exchange with the ATO. The Australian local entity needs to obtain the master file from their global parent. Now, the local file in Australia isn't per the OECD design. This is a unique ATO design. And has a lot of detailed information in it. It's also distinct from Australian transfer pricing documentation, which is your 5 key question format documentation that can provide penalty mitigation. So they're distinct documents, and it's important to be aware of that. The country-by-country report requires detailed, granular information of income and taxes paid and certain indicators of economic activity within the group by country, as the name suggests. Has anyone seen a country-by-country report as yet? We'll show you one shortly.
Does this head office provide you your country-by-country report yet? Have you seen your own? No? I thought there were a couple here with December year-end. No? Okay. Master file? Anybody received from the head office their master file? No? Okay.
I think it will be important for you to actually see the information that these contain, so that you see what's going to be lodged with the tax authorities, with the ATO, and with the tax authorities internationally. It's important for you to understand the extent of information that will be provided.
I think quite important point to know here is that in Australia, it's responsibility of the local entity to lodge all of those 3 statements. So essentially, it's your responsibility to make sure that they're available to you and lodged with the ATO by deadline. The deadline for lodgement for all of those is 12 months after the year end. So essentially, country-by-country reports very often would be lodged by your head office, but we will talk about it a bit more later. But both master file and local file, you would be lodging in Australia. So if you have a December year end and if your requirement is approaching, then it would be a very good idea to make sure that those documents are available.
All right. Why do significant global entities need to comply? Well, you should be aware of the very high penalties for non-lodgement of documents by now. What's also important to understand is that those penalties are by document. So if you don't lodge your local file only, for example, or you don't lodge your country-by-country report, or you don't lodge your FDT return as a significant global entity, or you don't lodge your BAN, now these penalties will apply from the 1st of July 2017. So as you can see, they're very high.
And obviously, that's a steep case you're probably going to use for those companies who do not want to comply or can't comply by some reason with their country-by-country reporting. Oh, so far, ATO have been quite reasonable, and if you have problems complying because your head office is not cooperating, for example, or head office have not yet prepared the document, then ATO would be very open to have a conversation and either provide an exemption or extension for those statements over which you have very limited control, for example, master file or country-by-country report.
And then, as well as penalties for non-lodgement, there are, of course, penalties for tax shortfalls. These have been doubled for significant global entities and can exceed the relevant tax shortfall. So it's in a significant global entity's interest to comply. The point of this slide is to illustrate that the focus of the transfer pricing cycle for a significant global entity is both at the global level and at the local level. So while the local entity needs to has responsibilities for filing the country-by-country report, the master file and the local file, often they'll be prepared at the global entity level. Now, the country-by-country report will tend to be filed with the foreign tax authority, and the ATO has information exchange mechanisms with foreign tax authorities to obtain the country-by-country report. But that's not for all jurisdictions. For a few jurisdictions, I think Cayman Islands was one of them that we found this morning.
Cayman Islands probably signed, but Dominican Republic hasn't.
Right. Is anyone aware that they have a parent in a country where there isn't information exchange with the ATO?
So some obscure countries, if you have a parent in some obscure countries, it's worth checking, because majority of countries signed, I think 63 countries signed, but there's still quite a few on the list which haven't. And if they haven't signed the exchange of information agreement, essentially the country-by-country report would not be provided to the ATO automatically, and then it's your responsibility to make sure that you have obtained it, it's ready, and you can launch it by the deadline.
So as I say, the global entity will prepare the country-by-country report. They'll prepare the master file and need to provide that to the local entity for lodgement with the tax office. They may also prepare a local file, but be aware that the local file that they may be preparing is likely to be in accordance with the OECD design, which is different to the Australian local file, which is prescribed by the ATO. So that's why the local file in Australia must be prepared according to the ATO design. And the OECD design also isn't transfer pricing documentation. So if that happens to be prepared, the local file according to OECD design for Australia, that's not going to be to provide penalty mitigation as Australian transfer pricing documentation would. Going over then to the local entity on the right and their obligations, we're talking about Australian transfer pricing documentation in accordance with the ATO's 5 key question format to meet the standard of a reasonably arguable position, which provides the penalty mitigation I'm talking about, it needs to be prepared before the tax return due date for the relevant year. Doesn't need to be lodged with the ATO. These are the same rules that have been in place for a few years now. Separate and distinct to this is the Australian local file, which we're going to go into more detail about shortly. As I say, it's the ATO design. Now, the next obligation is prepare the tax return documentation, the tax return and the international dealings schedule to the tax return due for lodgement 6.5 months after year end. So for 31 December year ends, you'll probably be aware your tax return due date is 15th of July. There is a concession such that if Part A of the local file is prepared and lodged with the tax return, it can replace the international dealing schedule, which means that all that need be lodged 12 months after year end is Part B and the short form local file. So you don't, if you choose to adopt that concession, you don't need to prepare both Part A and your IDS, only Part A. Yes? Not this first year. No, people generally weren't ready, I think. The guidance from the ATO was issued quite late. So I think, therefore, people generally weren't ready. But a few did.
A few did, I think, but I generally advise my clients not to. Not the first year, simply because there would be a lot of information you're providing to the ATO in an early cycle, and they probably have a bit more resources to review it, because can you imagine how much information they're going to get when everybody submits all of their country-by-country reporting statements. And once all of that information reaches the ATO, what do we think they're going to do with it? Well, the aim, obviously, is to increase transparency, but also to help tax authorities to select companies who they want to look at in a bit more detail. So we know that the ATO have already developed risk assessment tools, and that's one of the reasons why the documents need to be submitted in XML schema, which Thomson Reuters will go into a bit more detail about, because all documents are transmitted electronically in the same format and straight away converted at the ATO and go through the risk assessment matrix. So country-by-country reports would be able to show ATO if an Australian subsidiary stands out from the rest of the world, if their returns are out of line with the rest of the world or out of line with what ATO expects for a company of this type to generate. So that's a red flag. Then you submit the local file, the ATO design. Again, there's a lot of information, especially in Part A. There's a huge amount of information provided. But again, it's provided electronically in a way that it can easily go into the risk assessment tool. Again, if there's anything which seems out of line, and we'll go through detailed information which is required a bit later, again, the red flag. So once you have the red flag, then ATO will have a lot of documents to read, because master file is a written document, short form local file is a written document, there's written agreements to be provided. So all of that to read as well. I understand that when you submit your statement, the companies would be risk assessed. Whether the ATO would really review every single document, I think probably is a question, whether they would read every single master file. But they have been increasing the task force, and they have been training, so they're probably ready.
I'll hand over to Nick
now. Thank you, Kathy. So I think those of you said that you actually haven't seen your CBC report for your group company. So So I suppose the positive side is you haven't actually had to go through the nightmare actually getting all these numbers together, because your parents have the logistics of pulling the numbers from the financial system, dealing with things like consolidation and exchange gains, losses and things like that, which presumably you won't have to deal with. I think the thing which you need to have an appreciation of, as Natalia said, is how the ATO might look at this in terms of risk assessing groups. And I think we've got some idea, even more in Perth than, say, some other cities, on how the ATO might look at risk assessing groups. What they've been doing over the past year or so is issuing what we call practical compliance guidelines. And so they've been introducing that on areas like financing, post-Chevron, and they've also issued that in terms of sales and procurement hubs. So those of you who've got operations in Singapore, which quite a lot of my clients have, you might be looking at, say, paying franchise fees to Singapore or commissions for sales or procurement. What you'll see from the IDF, the local file, is, I suppose, transactions going off to Singapore, but also you'll see the profitability of Singapore and the number of employees which they're making, and the way in which the ATO has a look at in terms of ratio analysis to identify tax risk. If they look at almost the profitability or the cost plus return of Singapore and saying, do you have enough employees to back it up? And one of the key planks of the BEX project was actions 8 to 10 in terms of value creation. So do you have key operational people to support any intellectual property or any sort of sales or risks that you're managing offshore? So that seems to be sort of a key focus of the ATO. And even before this, I've got some clients who have audits and risk assessments on transactions with Singapore and tax havens on areas like franchise, bareboat boat leasing, and those sort of things. So and financing seems to be a big area which the ATO are looking at as well. So I think we should be expecting more of that over the next year. The other thing which you have to do is sort of disclose what sort of activities you take in Australia. And I suppose a lot of our groups, it really depends. Some of them might be what we call full risk consulting sort of engineering firms, but sometimes we have groups who treat themselves as limited risk service providers or distributors. And what we have seen on audit is the ATO actually challenging the contention of whether groups say a cost plus entity or making a certain return on sales, and saying, going to source documents and saying, is the value which the Australian entity contributes in line with the reward you're giving them? So if they're thinking you're actually carrying out quite high value added activities and actually taking quite considerable risks in terms of your decision making, they might say a profit split is more appropriate. And one way which they could potentially look at this is, and dig further, is look at the master file. So previously there's probably been quite little in the way of knowledge about the wider group. They just had Australian documents, but in your master file you're going to have to do a detailed value chain of the group, and that sort of shows really how the group generates profit. So to the extent that, say, your Australian operations, for example, in the mining sector, they might be having all the mining resource in Australia, but you're seeing profit offshore from sales or procurement. They might say, are those people who carrying out those functions, is that something which Australia really needs them to be based in Singapore, or could they have done it themselves in Australia? So we're expecting quite more challenges having the master file. The other thing which is a nuance from which Kathy talked about is that if you were based in other countries such as the UK, complying with the BEPS project is a bit easier because it's usually your master file and local file. Your local file would usually be UK compliant because the UK very much follows OECD guidelines. We don't have any particular UK guidelines, whereas Australia we have these five key questions of transfer pricing. So you wouldn't get penalty mitigation unless you prepare it in accordance with those guidelines. So you would actually have to take out items of the master file and put it in your Australian local documentation to make it compliant. And one thing which we're grappling with as a firm is that the ATO have introduced said that they will incorporate as new July 2017 OECD guidelines on transfer pricing, and that involves quite a detailed consideration of risk and also value creation. And most transfer pricing documentation, which I tend to see, it tends to be sort of quite vague in terms of the functions and risks that companies perform. And what you see on audit is that the ATO are pressing down and saying, what key source documentation do you have to prove the functionality in terms of, do you have board minutes, do you have emails, do you have tender documents to show the contribution that Australia has made versus the overseas entity? And if they can show that Australia has made more contribution, then they can show that they're making more profit. And the general approach I'm seeing is that they think advisors and corporates almost, fibbing, and it's proved it. So it's always something to bear in mind when you actually do your documentation. I'll hand it over to Tanya to talk about.
I've got already. Microphone. Okay. Okay. So before we move into local file, is there any questions at all so far? Anything? No? Yes. Let's hope I can operate that. The local file. Have anybody looked at local file instructions yet? Have anybody looked for local file, sort of local file performer, form to submit? Anybody? No? Excellent. So what did you find? Yeah, it's very detailed. There's a lot of information. It's a very, very thick guidance if you print everything, which I did. But not killing trees, it was decided, I promise. So anyway, what you wouldn't find is you wouldn't find a form to complete and submit. It's just a lot of instructions. And the reason why there is a lot of instructions is because the submissions only accepted in the electronic form using XML schema. And essentially there's no form to complete, but there's a lot of information about what exactly you need to provide. So there are 3 documents most companies would need to provide to the ATO. Short form local file, Part A, and Part B of the local file. Some of you may be very, very lucky and only need to provide short form local file. Others would have to complete all 3 parts. Have anybody risk assessed themselves? Does anybody here needs to prepare short form only? No? Well, if you do, then you're very lucky. So if you haven't assessed, then I suggest you do, because if the only thing you provide is the short form, you're providing ATO with a written document and not a lot of numbers. So who can complete short form only? There's a few criteria which ATO has specified, and essentially, if you haven't been submitting ideas because you have less than 2 million of cross-border transactions, you are probably the lucky one. And then if you satisfy some ATO de minimis rules for small taxpayers, that's essentially taxpayers with less than 25 million turnover, but distributors are excluded nicely, so no distributors, or the ones with low materiality. I think low materiality, something like less than 2% of related party transactions. If you think you satisfy any of those requirements and do not have transactions on the exclusion list, and those are derivatives, any transactions in relation to intellectual property, and transactions of capital nature, you may be the lucky one, and you have an easy ride. So if you think you are eligible, do consult your advisor, because obviously if you submit the wrong form, then nobody knows whether the ATO would still feel that the penalties are applicable. But if you are the lucky one, then you have an easy job. If not, then it's quite detailed and complex. What's in short form local file? So there's 5 questions, and there's no detailed guidance have been provided by the ATO as yet. So the first question is the organizational structure. So ATO is asking you to provide organizational structure, but it's not just organizational structure. You also need to identify all the management within your company and who they report to overseas, including country where those people are located. Would you have this information available to hand? Discussing it with other people across the country, it seems that it's quite a tricky question. It's a question which comes quite often when you do, at the moment, ATO audit or apply for an APA, because what ATO is looking for is if you have legal agreements which say that you are transacting, for example, with Ireland, but all the management sits in the US or maybe in the UK, then there's clear disalignment of how the group operates versus how it operates from transfer pricing perspective. So that's a substance question, really. And having some audits with the ATO, it's a question where some of the companies have to really spend some time even trying to draw the chart, because the structure is quite complex. Sometimes people sit in different countries and there's approvals needed just to indicate who sits where and what they do. Well, it's just management of at the local level and who they report, each of the managers immediately, what's the reporting line, reporting structure. Then there is a question for business description and strategy. And that's where master file would be useful. So if you are completing local file without master file, you are in danger of providing ATO some information which again does not align, especially those with December year-end. I'd encourage you to get your master file as soon as possible. So when you complete the local file, all your information aligns. Couple of questions which ATO really likes. Recent business restructures and transfer of intangibles. And again, the reason the ATO likes them is because they believe that those particular areas, if there was a restructure or if there was transfer of intangibles, may present a risk to Australian tax base. So if you had any of those transactions in the near future, then you need to identify them and describe. And the final question is key competitors. It's quite an easy question. So really what you do is just list some of your key competitors. You don't need to provide anything else, but what do we think ICO is going to do with this? So, correct. So basically, if you believe there's somebody who's your competitor, direct competitor, you're more or less identifying other companies in the market who you should be performing very similar to. Again, something to give some thought, I think. So this is the short-form local file. ICO may provide more detailed instructions, although there is not a lot of time, so probably not. And that document can be done in Excel, in Word, and then transmitted to the ICO via the software. So if you're lucky, that's all you essentially have to submit. And if you don't qualify for the short-form local file only, you still have to submit the short-form local file, but you also have to submit Part A and Part B. And Part A is where there's a lot of financial information, your international billing schedule on steroids, really. And Part B gives ICO information to read. Essentially, it provides written agreements that are for some of your private rulings to ACs. Any questions so far? No? Shall we move to the case study then and look at the local file in more detail? You all have a case study in your folder. And I think we've been very optimistic with that case study. So essentially we have 6 transactions, but normally we don't have time to complete that. So let's just look at the case study. So what Joanne is now doing is essentially she is accessing the performer for completing the local file. Sorry, can I move? I'll move. So what we have an Australian company with 31st December year end, so all the local file and CBC information is due in a couple of months. And they're involved in manufacture and sale of pharmaceutical products in Australia. And all transactions are based on accounting records, apart from intellectual property transactions, license and royalties, and foreign exchange transactions. Those are based on tax records that's pretty much in line with what you always have to do in the international billing schedule. Now, if you remember, when you were completing ideas, in fact, have you all completed ideas before? Okay. So you remember you could aggregate a lot of transactions together. So what you will need to do now, because there's so much information requested, is it's suggested that you disaggregate by type of transaction, and also disaggregate by related parties. So for example, if you have 2 companies in France, let's say one provides management services and another sells you raw materials, then you might want to separate those transactions. So the first transaction we have here is transaction number 1. payment for raw materials or purchase of raw materials from China call. So Joanne identifies it as number one, transaction number one. And it's important because when we go into part B, because now we're in part A, you will see that essentially every transaction would still continue to be identified by that number. And the next question is the transaction type. Our transaction type is purchase of raw materials. So it's tangible property over revenue nature. And Joanne, is it easy to fill in? Oh, microphone. I thought you were quiet.
Yeah, it is easy to fill in because in the template which Thomson Reuters has developed, we've put in drop-down boxes where there's a standard list of answers to choose from. So here we've put in all of the ones from the ATO's website. So just have to scroll down and choose the correct transaction type.
And the reason why we have Thomson Reuters here is essentially because you need a software to submit all of your country-by-country reports. And essentially, we're an accounting firm, and the majority of advisors subscribe to software providers. Obviously, a lot of funds, I'm sure, have been invested. So, the next question is whether this transaction is part of relevant agreement series. In our case, the answer is yes. It is part of relevant agreement series. But let me stop and just talk you through what it's actually asking you. So essentially, as we said, you will have to provide ATO with written agreements which support your transaction. How many of you have only one written agreement for every type of transaction? Nobody? Have you? You do. Fantastic. So, looks like you're in minority. Do people even have written agreements? Yes. Okay, excellent. So, you may be lucky. You may have one written agreement which covers the whole transaction type, or you may not. And when you don't, can you imagine you have 15, 20, 30 agreements? ATO doesn't really want to read them. So what they are asking you to do is to do some work for them. And essentially, they're asking you to have a look at your agreements, if you have multiple, and see whether they all share certain characteristics. And I have outlined them in Appendix 1. So essentially, those agreements would be with the same related party and on the same term apart from date, volume, price, and delivery. Date, because date probably does not affect the risk. Volume, because you can buy 1 unit, 100 units, so the terms would still be similar. Price can fluctuate throughout the year. And delivery, it doesn't matter whether it is delivered, I don't know, to Perth or Sydney. So it's just the delivery place. What cannot be different is it can't be for a different product, different intellectual property, different currency, or different terms like warranty or termination or damages. So when you have transactions which fit within those descriptions, you have something called relevant agreement series. And when you have relevant agreement series, instead of submitting today to every single one of them, you can submit only one, most material and most representative. So in our case, yes, it was part of relevant agreement series, so we say yes. And here we had, I think, 25 transactions. So it is a moderate level of transactions covered by the same agreement series. Some general information about the company. And now we come to the name of the non-resident entity. In our case, it's ChinaCom. And tax resident of it. Amount of consideration paid if it is of capital nature. We have purchase of stock, which is not capital nature. So we put 0, I think, over here. And now let me pause for this question. Was non-monetary consideration provided? Here it's of a capital nature, further down we have a revenue nature for the transaction. So was the non-monetary consideration provided for transaction? Next question is obtained. Does anybody remember this question? Have you seen it before anywhere? No? Well, it was part of your international dealing schedule for the last 4 years, and I think everybody have happily skipped it. And because everybody happily skipped it, we now have it for every single entity and every single transaction. So what is it you're asking here and why? Does anybody have people in your organization who maybe have regional roles? Anybody? Hands up? No? 1, 2. Excellent. Are they recharged? Are they recharged overseas? They are. They aren't. So a combination. So that's what you're asking here, essentially. If you are doing something for an overseas entity and you're not receiving anything, sort of any remuneration in return, why would they want to know that? Well, obviously, that's probably a risk marker. And it also goes both sides, because they also want to know if you received something for which you didn't pay. That's probably a good side, I would have thought. If you received something and you haven't paid for it. We had examples before where, for example, IT services have not been recharged, or management services have not been recharged. Given the detail it goes into, it's probably worth, if you have transactions like that, to identify them, because at least they're positive. Well, in our case, we don't have anything, so we're going to say no. So now we got to numbers. Now we finally can put numbers. Amount of expenditure not of capital nature when contact purposes for the transaction. So that's where you finally disclose the amount you have paid or received, or in case of foreign exchange gains or losses or any of the license fee or royalty transactions, whatever you have in the tax return. So we had 1 million. So this is a non-monetary consideration question for non-capital nature. And we don't have any. Next is the question which causes a lot of discussion normally. I'm not sure sort of how it would work here, but foreign exchange gains or losses deducted for transactions or returned for transactions, and losses deducted in gains returned. And that's based on your tax record. So who have any gains or losses from your related party transactions? Anybody? Few? Excellent. Okay. And those gains or losses, are they easily attached to a specific transaction? No? No. It's probably one of the questions which cause the most controversy, because companies never needed to have their accounting records essentially working out transaction by transaction how much gains or losses they essentially had. And this question first appeared in the IDF this year, and I think it was published something like 3 or 4 weeks before the IDF was due. I don't know if you've already filled in your IDF and what you've put in the IDF, but a lot of my clients had issues, and we went to the ATO and tried to get some guidance. I think at the time when the first lot of IDSs in October for December year-end was submitted, the ATO said, best estimate, keep your records. Keep your records, because if we want to look at it after, you need to remember how you arrived at the numbers you are disclosing. Well, at the moment, the discussions are still ongoing. I don't know your company's circumstances, but can you imagine a bank with hundreds of transactions every day trying to match foreign exchange gains or losses? It's a big task, and there have been consultations with the ATO, and it's still ongoing. But the current sentiment from the ATO for the first year, because there wasn't a lot of warnings provided, the best effort and keep your records seem to be the order of the day. But essentially, there's no conclusion as yet, and it may be that they're asking people to change their accounting systems. So just watch the space. So in our case, we had 50,000 gains. The next question would be familiar, and you would have had it in the International Dealing Schedule. What transfer pricing or capital asset pricing methodology has been applied to this transaction? And essentially what it's asking is what methodology you applied. In our case, we applied CAP. And it's there. Now a bit more controversial question. what level of transfer pricing documentation has been prepared for this transaction. So all of you filled in ideas before. Who has 100? Excellent. I have a lot of people who keep documentation. Fantastic. What does that mean? Sort of, what have you got to disclose 100%? Benchmarking and anything else of benchmarking? Yeah? So is that OECD style document? Is it Australian transfer pricing documentation? Is that policy? So it's a funny question. I think it was discussion in relation to the international dealing schedule for a very long time. What to disclose as a level of documentation. The question really is what level of documentation for that particular transaction. So it means really you either have documentation or you don't. It doesn't ask what quality it is. But when you read instructions for the ideas, it's very unclear. Sort of ATS says, Instructions really say that documentation can be anything as long as it allows you to essentially conclude that your transaction sounds length. When you read through all the pages, that's what more or less how you can summarize the ideas instructions. Here, I think the ATO was much more concise because when you read every single example of what they consider to be positive answer to this question, in all the examples, they have A, contemporaneous documentation, and B, Australian transfer pricing documentation. So that's a step above OECD. So what does contemporaneous documentation mean? Again, local file is silent on that. In terms of ideas, instructions, there is some guidance on what the word contemporaneous documentation means. Essentially, it means one of the two things. One is this year's documentation prepared specifically for this particular year. You're submitting your local file. And number two, documentation prepared before you entered into transaction and essentially tested contemporaneously. So you can have a planning document and then have something roll forward to build up, something to essentially say every year. Yep, still on plan. Yep, checked it, still on plan. So it's either the full-blown Australian transfer pricing document, which is prepared before the tax return is lodged, or the document which is prepared when you're pricing the transaction, which makes sense because if you are putting something in place ahead of time before you entered into the transaction, that should be contemporaneous, I guess. What's funny here, I think, is that nothing really in the guidance for Part A goes and very, very clearly explains or gives examples of what is exactly Australian document, what is exactly documentation they're asking for. So it's a bit of a possibly ambiguity. But it's clear that ATO really wants you to prepare Australian specific transfer pricing documentation. I digress for a second, but actually, in the consultation with the ATO, what they were saying is that local file was designed in a way to make life of Australian corporates easier, Because, well, they thought it was. Because it doesn't repeat information or it doesn't repeat requests which are already contained in Australian transfer pricing documentation and sort of add on to Australian transfer pricing documentation. So in our case, we have documentation. So, and it was prepared for current year. So we're going to put 100.
Yeah, so in our template, the last tab, we've got a list of all the different answers to choose from. So in terms of the level of TP doc, if it's 100%, you would disclose code 6.
There's a few questions specifically for banks. I think we're going to skip them. Okay. Next one. Is this category covered? Is the transaction covered by a category on the exclusions list? What does that mean? That's a bit of good news. So essentially, ATO does not want to receive and does not want to read every single written agreement for every single transaction. So what they have done is they've essentially said, okay, look, we know that there are some transactions which would be low risk. So for them, when they go to Part B, you do not need to provide us with an agreement. And the list of the exclusions list is in Appendix 2. And when you look at it, what exactly is covered by exclusions list, it's a lot of transactions which would satisfy simplified transfer pricing record keeping. Is anybody here familiar with the term? Is anybody prepared simplified transfer pricing documents? No? Only large companies? Excellent. So essentially, this is for companies who have some transactions which are of low risk, and transactions of low risk would be some small intragroup services when they are combined value of less than 1 million or less than 15% of total turnover expenses. Some management and administration services. Some management and administration services, which are low in value again, and some technical services, low value, and if we receive technical services, then we pay not more than 10% markup. If we provide technical services, then we receive 10% markup and more. So obviously we have a cake and eat it. And some low-level loans. Interestingly, the transactions where there is a reimbursement of employee secondment expenses is also covered here because obviously they don't want you to provide lots of documentation for just reimbursement. I'd suggest that you have a look at this appendix because it means you will have less work when you're preparing local files. So this means you don't need to provide those documents. You don't need to provide written agreements which correspond to those transactions. In our case, the answer is no. Not covered by exclusions. So now we go to Part B. That was Part A. So Part A done. Part B. Do you remember we talked about each transaction having a unique reference number. So that's where we put that reference number. We have transaction number 1. So in part B, we have transaction number 1 again. Next question. Which transfer pricing methodology has related party relied upon for this transaction? We already had similar question, didn't we? But the first question was, what did you rely on? So now that's what your related party relied on. Does anybody know what your related party relied on? No? Excellent. So essentially, this is when you read the instructions, this is methodology they rely when they price the transaction. So if you know, that's good. But at the same time, maybe let's stop and think why it still doesn't work. Why would they still be interested? Nobody? Okay. So when you think about it, you are here, a distributor. Have we got any limited risk, low risk, no risk distributors here? Anybody know? Excellent. It's a different audience. Normally, there's quite a few limited risk distributors in the audience, and that's the companies which have target operating margin, no matter what. So essentially, no matter how the transactions are priced, for example, transfer of stock or whatever it is, they will always get the same revenue. And very often the other side will be pricing this transaction differently. So that's really to try and catch where you have created a transfer pricing methodology to price your transaction in Australia. Again, significant mismatches, depending what it is, might just have a red flag. So in our case, it's the same methodology is actually covered. We have a perfect example here. And then for those who don't know how the related party priced the transaction, the question is, can you obtain that information? Now the question, have you got written agreements or other relevant information evidencing your transaction? So I understand here everybody has written agreements. That's perfect. If you don't, then you can submit some other documents. For example, purchase order number. So essentially, purchase order. The document which would show the key terms for transaction. ATO says you don't have to create the document to answer this question. So basically submit whatever you have. But I just wonder, if you do not have any written agreement, if you do not have purchase order numbers, then what does it say to the ATO? Which message does it send? Essentially, a message here is we're supposed to be pricing everything on commercial terms and arm's length, and it probably creates a bit of a question how much negotiation or how much unplanned discussions have been going on if you do not have written agreement or if you cannot show evidence of some sort of negotiation or some sort of decision making. But we do have a written agreement, so thank you. And then if you don't have written agreement, there is a chance for you to say, yes, if you insist, I can get it from the other side. Now we have a few questions, and sort of quite a few questions here, which ask whether the written agreements have previously been provided to the ATO. So essentially, for every single transaction, if you've provided agreements before, then there's a lot of information here which would allow ATO to find them if they have it somewhere on record. Title of the document, what year it was provided, has it been amended, if it was amended, please attach the amendment. So actually too many questions. I guess you can just attach the document if you've already provided it. Or you can answer the questions, or you can do both, I guess. There's quite a lot of questions on that. What year the amendments have been provided, etc. The next one on the APA and ruling. So the question really, are there APA, which is advanced pricing arrangements, or private rulings provided by other jurisdictions for this transaction? You know how sometimes companies agree unilateral APA? So ATO would like to know, ATO would like a copy, and ATO would like to know what you agreed on the side. So obviously they don't want to have reduced tax because of that. And then there's a question sort of, if you have that, in our case it's false, but if you have an APA, have it been provided to the ATO, or can you please attach it, essentially? And that's pretty much it. Okay, so congratulations, we've done one transaction. Excellent. Have you got any sort of specific questions in relation to your transactions we haven't covered? So let's start from there.
Thanks, Natalia. Just one question. The case study gave the example of saying that the foreign exchange gains or losses were completed for the income tax return records. So does that mean that we disclose in here the realised FX gains and losses? Okay.
It means you disclose realised gains and losses. And essentially that's what you need to disclose for the IDS as well, only realized gains and losses, but essentially transaction by transaction. So if you have them accumulated, you can somehow.
Just a quick question on the local file part A. I believe that we are required to mention the name of the company and also where the country they're based in. Now, in the country-by-country reporting, is there a requirement to do the same thing as well? You have to mention the name of the company and also the country.
Excellent question. So, country-by-country reporting, the table is actually, if you remember, there's two tables. There's table 1 and table 2. And I think table 1, you can aggregate all transactions for one specific country. So essentially, when you're disclosing information such as revenue, for example, such as profit before tax, you can do it country by country. Why? Because every country should be interested only in its own metrics, and you combine all the metrics for one specific country. But then in table 2, and I don't know if you can go to table 2, if you can see, sorry, is it me? No? If we go to table 2, then it asks for tax jurisdiction. For example, shall we say, I don't know, France. I like France. So tax jurisdiction France, and then we have a couple of entities in France, and you would be disclosing them essentially entity by entity and clarifying what it is exactly they do, because what information you provide here is the accumulated country financials. So each individual country tax authority can compare what it gets in tax versus what some other jurisdiction gets in tax. But then it also allows them to see which entity does what activities in this country, and that would be very useful when they go and look at the master file. So essentially, it would allow to match, like in master file, do you remember we had the value chain analysis? So what value chain analysis would show you is essentially how the company makes money. So what's the key driver for this company to be profitable? For some, it may be R&D. For others, it may be magnificent distribution network. For third one, it's excellent management. So essentially, those two would match together. So essentially, the answer to your question is you don't need to disclose the name, but you need to disclose what the entity does. And in the local file, you do need to disclose the name, and you need to disclose the tax residence. Any more questions? I feel like I've been talking for a while. So I think what I'll do, I'll pass to Joanne to essentially show how exactly to transmit the information. And there's some little further nuggets when you are filling in the general information for the company to be aware about.
Thanks, Natalia. So here's one we prepared earlier with all 6 of the transactions. All 6 of the transactions in the case study. So once the template's filled in with your own transactions, it'll look something like this. So that's part A and part B filled in. There's also a third tab with information to complete, which is some general information about the submission itself. So it's things like your reporting period, the intermediary information, if your advisor is lodging on behalf for you, reporting entity information such as ABN or TSN.
Maybe we can talk a bit about which entity lodging.
Sorry?
Maybe we can talk a bit about how it's allowed to be lodged. So basically, there's 2 options. It's either when you lodge it via the software, even if it's advisor, for example, even if we are lodging, we can either lodge it as a tax agent or we can lodge it on your behalf. So I have a few clients who prefer to make sure that all documents are lodged under their name. So essentially, there is an option to do that. It doesn't have to be coming from the video side as your tax agent. It can still be coming from you, even if it's coming from the video.
Yeah, thanks. That's a good point. And I can show you how that works in the software. So essentially, as part of the lodgement process, you can choose whether you're lodging as the reporting party or as the tax agent. If we keep going down in this particular tab, there's a few other questions such as statement lodgement criteria, short form lodgement criteria, master file lodgement criteria, and CBC report lodgement criteria. So there's quite a few questions here, but not all of them are mandatory. So it does look a little bit intimidating at first, but Most of the questions are just true-false questions. So it's not as, I guess, time-intensive as completing parts A and B. Okay, so now let's go into the software. So we'll be looking at our BEPS Action Manager tool, which sits on our OneSource platform of tax and accounting products. So we've got a few transfer pricing products, including BEPS Action Manager, which caters for country-by-country reporting, master file and local file. We'll only be looking at the local file today. There's also other applications such as documentation and benchmarking applications, some knowledge research tools, and also other tax and accounting products such as tax provision, corporate tax, indirect tax, SVT, accounts production. And I've got my colleague Paul here today, so if anyone's interested in our OneSource products, feel free to come speak to us after. So jumping into the BEPS Action Manager tool, this is a global web-hosted solution. And how the process works is we'll be uploading the spreadsheet we just completed, as well as attaching the relevant intercompany agreements and any other attachments that need to be made. So I've just created this blank case study project, so we can go through the process from start to finish. Okay. So we'll just be creating the local file to start off with. And choosing Australia as the country. Now there's an option to download a blank version of the template which is built in. And once that's done, we simply just browse to that file and upload it this way. So you can see we've successfully imported all 6 of those transactions.
John, once you've imported those transactions, can you change them?
Yes, you can. So whilst we recommend reviewing the template before you upload it, if you do find that you need to make changes, that's not a problem at all. You can make changes in the software itself. But it is recommended that you do all the reviews beforehand because it's just a bit easier to change things within the Excel template. So the first thing we'll look at is the local file other information, which was the generic questions about the lodgement itself. So if you had to make changes, you just have to click on edit and change it this way. But it won't flow back to the spreadsheet template. So it's best to keep a copy of the Excel spreadsheet in the most updated version possible. So now let's look at parts A and B with all the transactional information. Okay, so if we click on part A, you can see it's loaded in all 6 of those transactions. And again, if any changes have to be made, you can just click on the edit button and choose from the drop-down box. Same with Part B. And the next step would be attaching any intercompany intercompany agreement, which we'll do in general transactions. And it's simply selecting the correct transaction number and clicking attach file. We'll give it a title. Browse for the file. Select the agreement type. And click next. So the next step is choosing which transaction the agreement we uploaded applies to. So for example, if you had a master agreement that covers several transactions, you can simply select the other transactions that the agreement relates to as well and transfer that across. So it just saves a bit of time instead of attaching it again and again for all the relevant transactions. You can just simply upload it once. So if we scroll back across, you can see it's attached to those 3 transactions there. Now going back into local file, the last step is the short form. We do have a Word template with all 5 of those questions that we went through earlier. But to attach it to the submission, we'll just have a look now. We click on Transmit to ATO, which is 6 steps to follow before it actually goes to the tax office. So here is where we can attach the short form as an external attachment. So you're able to prepare the short form completely outside of the software and simply, again, browsing for it here. It can be Word or PDF.
Does it have to be just one file?
It does have to be just one file. So if, for example, you have your management structure as a separate file, you just have to combine it into one single file.
And probably PDF is better because obviously then you have control over what people see, because I understand if you're very clever, you can see all the track changes, for example, in the Word document. So you have to be quite careful with that. I can't do it, but I've heard that you can.
Step 2 is attaching the master file. So once you receive that from your head office, again, simply browsing for that file and choosing the correct file to upload. Step 3 is attaching any financial accounts if you needed to submit them with your local file.
Can we pause here for a second? Is anybody here not submitting financial accounts to ASIC? No? Everybody submits to ASIC? Okay, so that's irrelevant then. That's local account. So basically, what it's asking you to do here, it's asking you to submit your account to the ATO. Those ones go as part of the local file. And if you are not loading currently anything with ASIC, then essentially it just says the best quality available. So you can go to, if you're preparing very good accounts, and obviously you attach them there, otherwise management accounts would do, and goes down and down. There is a checklist in the local file instructions in terms of what's considered best quality. So if you haven't provided accounts to the ATO before, then that's why you provide them now. Sorry? you'd be lodging management accounts for local entities. I understand those do not go to ATIC. Those do not get published, but those go as part of the local file submission as a question. I don't actually know. Okay, I'll check and come back to you because I think this is different. So basically, this is a totally different requirement from the general purpose financial statement. General purpose financial statements, you just lodge with ATIC if you're lodging them with ATIC. Here, I think you have to submit them again, but you know what? I'll check, double check just to be sure, and we'll come back to you on that.
Step 4 is the declarations, and here is where you can choose to lodge as the reporting party, or your tax agent can lodge on your behalf. So it's just a matter of putting in your digital signature, ticking the box to sign the declaration, and then the 5th step is actually generating that report. So once we click generate report, the software will compile everything that we've uploaded from the initial spreadsheet template to all the intercompany agreements that you need to attach, your short form, master file, and financial account into the XML schema ready to lodge with the ATO. At the same time, it's checking all of those uploads against the ATO validation rules. So anything that doesn't conform, it'll tell you what you need to fix up before you lodge. So it's the final step of review and checking before the file actually goes to the ATO. You're also able to download a copy of the report, and it is in XML format. And once it's finished downloading, I'll show you what that looks like. And I'm not sure whether you've seen an XML file before, but once you see it, you'll understand why software is required
and
to
why
complete
you
the
need to
lodgement.
review the Excel spreadsheet, because essentially what you're reviewing and signing off to go to the ATO is the Excel spreadsheet, because once it gets transmitted, maybe you would be able to decode what exactly is transmitted, but it would be very difficult to review. The easiest form to review is when it's still in the Excel spreadsheet. It's easy to change, and changes keep track of each other.
And then the final step is clicking transmit to authority, and that goes directly to the ATO. So the lodgement process happens completely within the software. Once you have lodged, you can track all your submissions here as well. So it will tell you what the status of that submission is, and hopefully it will say successful if your local file has gone to the ATO successfully. So I'll just open up the XML. So it's in the machine-to-machine language XML schema. It's recommended that you do keep a copy of this because it's exactly what goes to ATO. And even though it looks like a lot of gibberish, you can actually see all your answers here in black bordered font. But of course, as Natalia mentioned, you're not able to make any changes here, and the review process should definitely come before this point. At the bottom here, it's got all of our attachments encoded into XML as well. So you can see we've got the short form here, master file, financial account, and the sales agreement that we uploaded. So that's the whole process from the software perspective. As you can probably appreciate, a pretty simple process once it's in the software. The hardest part is obviously actually preparing that spreadsheet template and gathering all of your transaction information, as well as all the attachments that you need to upload.
And it takes time. It takes actually a lot of time. So start early, I think.
So the question for the people on the webinar was, is the Excel template something that is prepared, that is done by a software provider? And the answer is yes, because it was mentioned a bit earlier during the presentation that the ATO hasn't come up with a particular form for the local file. They've only come up with the questions that need to be answered. So what Thomson Reuters has done is taken what the ATO has published in terms of the questions and put it into that spreadsheet template with all the drop-down boxes, so it's easy for companies to fill in.
And there's essentially two software providers. I think one of the big four developed it themselves.
Yeah, that's right.
And the rest, all the advisors are licensing it because I think investment is quite huge here.
Has the ATO reviewed the formats they're receiving?
Yeah, so we've done testing before the software went live, and everything that we sent through as test payloads have been acknowledged by the ATO, and we've been listed on the SBR website as well as like an approved vendor.
Yep.
Okay. I think that's it. The process is done. We've only done one transaction, so that's why do start early. Information there is enormous, and it takes so much longer. I think sort of having gone through the process a few times, the biggest investment of time is going through question by question and thinking what to provide, how to provide, where to collect information, and just putting it all together. So if you have December year-end, and if you are not qualified for short-form local file, then you probably do need to start acting sooner rather than later because it does take time, and I guess from your perspective it would take quite a lot of resources as well.
Yes, and thank everyone for coming along and joining Natalia for a very interesting case study. As Natalia said, there is quite a lot of work that needs to go into this, so if you would like some help, feel free to give one of us a call, and we're quite happy to help get it in before the year ends. As you know, I sort of been in charge of BDO sort of looking at all the software. We certainly found that Thomson Reuters to be the best one in terms of the transfer pricing documentation and also the local file. So we're using that as a firm in Australia and globally. So if you need any help with the Thomson Reuters, feel free to give me a call, or also speak with Paul, who's the local purse expert here on Thomson Reuters as well. But thank you very much for your time today.